Yo, 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 what is going on, everybody? Welcome to TrendSpider Live. My name is Mike, and in 5 minutes, 4 minutes, we're going to get the FOMC rate decision. Markets are probably going to go wild. I don't know about in 4 minutes, but definitely during Powell's speech. So definitely stay tuned. If you're in the chat, say what's up, tell me where you're from, and tell me what plays you have going into FOMC. Personally, right now on my chart, I'm just going to be watching the ES futures as the rate decision drops, and we'll see what happens. I'm on the 5-minute chart right now. Got the per session volume by price, so you can see what's going on with volume. Market's going not too crazy right now, but it's approaching the low of day. If you're out there again, please say what's up in the chat. Let me know you're here. Let me know what you guys are watching. But yeah, we got literally 3 minutes until we know what Jerome Powell and the Feds are going to do with the interest rates. There's pretty much almost a 100% chance that they are going to cut the rates by 25 basis points. But yeah, we'll see. You never know. Well, you never know. And then in 30 minutes after that, we're going to be watching Jerome Powell speak live and answer questions. So it should be a pretty fun time. It's going to be one of the biggest days in the market because after hours as well, we have Microsoft earnings. We have tons of massive stocks reporting earnings. We got Microsoft, Meta. We got Apple tomorrow. What is going on, everybody? Yeah, make sure to remove all those stops because they're going to get hit. Just kidding. But right here on my stock market map, what I've actually done is I put the sectors, and then I'm looking at the change percent since yesterday's close, and then the 7-day calendar change percent. So basically everything to the right over here is the stuff pumping today. So leading the market today, we got semiconductors, which is SMH. Of course, we got NVIDIA pumping to another new all-time high today. Then we got silver actually leading semiconductors, followed by energy, followed by tech, and then followed by gold. SPY is honestly pretty flat on the day. It's only up 0.14%. So clearly, I mean, if you guys have seen all the news, the market is clearly being dominated by just a handful of stocks. Tends to be a lot of the semiconductors. You know, you got Palantir, you got NVIDIA. Those are the stocks that are really ripping these days. What is going on, everybody? What is going on? Would no cut be bad? I mean, it's hard to say. I mean, there's pretty much almost 100% chance that there will be a rate cut. I would say it would be more likely that we see a 50 basis point cut, but I don't think that's going to happen either. You're seeing all the layoffs in the job market lately. That is something that Powell specifically mentioned in the last FOMC report. And with all the layoffs happening, that's clearly not good. So I think there's definitely going to be that rate cut, but very tiny chance that they cut more than that. I know there is some betting markets saying that there is a chance of that, but we'll see. We got the decision in 1 minute. In 1 minute. Let me put on the 1 minute chart for you guys on the ES so we can see this going down in real time right now. It's the ES futures 1 minute chart, and let's see what happens. It is time. It is time. Wanted to start the stream just a little bit early just so we can obviously see the charts exactly when this rate decision drops. What is going on, SJD News? What is going on? All right. Market is moving up right now a little bit. The decision should be out, checking around. I mean, we all pretty much know it's probably going to be that 25 basis points cut. But again, there's not 100%. Wow. SPY is ripping. SPY is ripping, and now it's gone, or ES, I should say. Let's see. Yeah, we got a pretty nice 1 minute candle to the upside there. Only 0.13%, but it was some good movement. We'll definitely get some movement right now, but I think the main event is going to be when Powell is speaking for sure. So we'll see. But right now it's looking pretty good for the ES. Hopefully for now you guys are in calls, but you know, Powell can take this away any second. Yeah. Let me see. Looking for the news. Again, it's likely the 25 basis point cut. And the markets, it moved up for a little bit. We're kind of being a little bit more tame now. In just a second here, when the action kind of stops in a few minutes, we'll check out the stock market map to see what's going on. And if you guys are new to the stream, please hit the like button and hit the subscribe button so you guys don't miss out on our future lives. We're going live again tomorrow for the earnings. Yeah, 25 basis point cut, I believe. Let's see. Yep, 25 basis point cut, citing U.S. trade concerns. Yeah, by the way, Trump and President Xi are scheduled to meet tomorrow in South Korea. That should be also very interesting. It is a wild, wild week for the markets. Obviously, markets are basically hitting all-time highs every day. It has been honestly amazing time if you're in the stock market. Yeah, maybe the movement definitely did happen the last couple of days, but I'm expecting definitely some more. You can see some volume came in on those couple of candles there. Looks overall bullish, I would say. But again, the second Powell comes out, that's when the real move is probably going to happen. So we'll have to stick around for about another 20 minutes and see what's going on. But let me know if you're out there in the audience. Again, hit the like button, hit subscribe. If you guys are new to TrendSpider, you can use the link I'm about to drop in the chat down below to save up to 55%, and you can get a trial and test out the TrendSpider platform for just $9. Just go to trendspider.com or use the link I just posted in the chat. ES is dumping right now. All that gains I was just made just vanished, and we're heading towards low of day pretty quickly now. Yeah, that was a bigger candle than the up move for sure right there. Let's see. Yeah. So obviously the 25 basis point cut. Market has moved a little bit. Nothing insane. Again, we're waiting mostly, for the Powell speech, which we will be streaming live. So definitely stick around, hit the like button, hit subscribe if you haven't already, because we're going to be doing a ton of lives throughout the next month or so for you guys to cover all this crazy market moving events. Let's open my stock market map here and see if anything has changed. Semiconductors are still, just updated right there. Semiconductors came down a bit. Silver is leading by quite a bit. Gold went up a little bit more. Tech went down a little bit. So overall, it looks like equities went down. It looks like silver is the overall leader right now. Real estate is down in the dumps right now, all the way in last place. TLT is down on the day, which is bonds. That's going to be a pretty big one to watch. TLT and real estate too are going to be huge to watch. Let's see. Let me take a look at Bitcoin. That's a good one. What is Bitcoin doing? Bitcoin, not a whole lot. Kind of the same as the market. Went up, went down. It's falling equities, it looks like. Let's open the SPY. Pretty much the same thing as ES for the most part. Yeah, pulling back. I mean, it's really pretty tame right now, I will say. Definitely a lot of volume came in, but really just some whipsaw action, probably hitting out some stops, and we're just going to be waiting until what happens during FOMC. In the meantime, let's go and ask Sidekick a couple of things about what is going on in the market. If you don't know, Sidekick is TrendSpider's pretty much AI agent that's connected to all of TrendSpider's data. As you can see, the SPY is dipping. It just hit a new low. Just hit a new low here. Wow. This is the 1 minute chart. We're getting quite a bit of volume today, obviously. And I think that was a low of day. Yep. And then it got bought up right from there. It looks like it's hunting the stops on these wicks right here on the 1 minute chart. But overall, not looking super great for longs at the moment. Hopefully we get Powell coming out and the stock market rips. I would rather the market dip right now, and then when Powell comes out, it rips personally. But let's go ahead and ask Sidekick a couple of things now so we can stay on top of the market. And say the Fed just cut rates by 25 basis points. I'm going to say, what are some key sectors or stocks for traders to watch. Also summarize the top news for today. And also there's big earnings from Microsoft, Google, and Meta after hours. Give your thoughts. So it's going to give us a pretty big summary of everything going on in the markets. I gave it context. It already probably knows that the Fed cuts rates because it's connected to all of TrendSpider's premium live news data, but just telling it. And now it's fetching news and earnings for Google, Meta, SPY, all the big movers. It's checking out all the news for the day. It's going to give us a nice breakdown of everything that is going on automatically with just a single prompt. What are you guys watching? Anything crazy on your guys' screen? Yeah, so 25 basis point as expected. Noted that inflation has moved up, remains somewhat elevated, and there's risk to employment. That was a big thing that Powell was talking about. Economic uncertainty remains elevated. We do have Trump meeting with China president tomorrow, which is going to be crazy as well. But let's see. And obviously, NVIDIA up 9% over the last couple sessions. Yeah. By the way, NVIDIA's market cap of $5 trillion is now larger than Japan's GDP. That is absolutely insane. I think it makes up like 16% of the US GDP, which is an absolutely insane stat. Mag 7 market cap topped 22 trillion. So again, like I was saying before, the market is basically being held up by the Mag 7 right now. The market breadth is kind of insane. Pretty much all the gains are coming from the top stocks like NVIDIA, of course. Obviously, SPY is breaking up, but right now it's kind of consolidating on the 1 minute chart at least. Let's see, says small caps are lagging. By the way, again, SPY moving up a decent bit here. What is going on, Burton? Glad to have you with us in the chat. If you're also in the chat, go ahead and say what's up. Let me know what you guys are watching. If you're new to the stream, hit the subscribe button. Go to TrendSpider.com and take advantage of the Halloween sale while it's here as well. You can try the platform for just $9 right now, which is obviously an insane deal. No strings attached. Try out everything on the platform for just $9. But let's see what else Sidekick is saying. Gold reclaimed 4,000. So as I was showing you guys on the stock market map a second ago, silver is doing pretty good today. It's leading the day. You see it had a gap up on the daily chart. Let's check out gold as well. Not necessarily the greatest sign for equities, but obviously equities are still doing just fine. TLT is down the day. SPY daily chart, you can see it tapped another new all-time high, but it has came down since. Back to the 1 minute. Let's see. And small caps. Let me take a look at IWM. So IWM has been a little bit more crazy because it is the most rate sensitive sector. Being small caps are a lot not profitable. They highly benefit from lower rates, the ability to borrow money since they're not profitable. And on the daily chart, you can see they're doing pretty good still. But overall, they are lagging the large cap stocks again. Stocks like NVIDIA and the Mag 7 are literally holding up the market. Top news summaries today. It looks like Paul Tudor Jones is giving a warning. Cool. People do that all the time. I've been seeing tons of those posts, which is honestly kind of a bullish sign. Trump's G meeting scheduled for Thursday, tomorrow, and they're going to be discussing tariff reductions on the fentanyl crackdown, supposedly. Nuclear power deal. Let's see. NVIDIA supplier sold out of their 2026 chip supply, posted record 8 billion Q3 profits. And obviously the government is still shut down, if you guys can believe that. It has been shut down for quite a while now. Our betting markets on people betting on how long it's going to remain shut down. We've had a lot of economic news delayed because of it, which has been interesting. And here we go, big tech earnings. And here is Sidekick's thoughts before they get released. Let's take a look at Microsoft, the first one up to report earnings. Let me remove, forgot I even had this indicator on. I'll show you guys more on that in a second. Microsoft been really choppy today on the 1 minute chart as it goes into earnings. If we look at the daily, It nearly broke to all-time highs, as you can see. Made a couple gaps just like the SPY, and it looks like it's about to fill one on the daily chart here. Again, as you can see on our platform, Microsoft is set to report today after hours, and we will continue being live for that as well. And let's see, looks like there's Azure experienced outages today, which is interesting. And then we also have Google reporting after hours today. Google, they are up big. Google has been absolutely killing it. They are breaking out to another new all-time high today. Very nice. And then we have Meta. Meta has not been doing as well as Microsoft and Google, as you can see here on the daily and the weekly charts. Still has some room to run up. Made a little gap there. It looks like it nearly filled. So Meta is an interesting one. And they also report earnings today after the bell. So stick around for that. We have 18 minutes until Mr. Powell starts speaking. So we'll obviously be streaming that for you guys. Check out the QQQ. Have not done that yet. It's pretty similar to SPY. Couple gaps up on the daily chart. Looking at the 1 minute, similar to SPY, had a rip up, came down, and now it's kind of consolidating. Really hasn't moved much since the announcement of the 25 basis points cut. Let's see. Yeah, obviously the bar is extremely high for these earnings. The market is literally rallying on the earnings that are the stocks that are reporting earnings today. So I don't you guys think how important these earnings after hours are, because if the market is being held up by like these 7 stocks and they're all reporting earnings today, it is going to be a massive, massive 2 days of earnings. Literally like I don't even know what percent of the US GDP is about to report earnings today, but it's a very large amount. And then we literally have Powell speaking in 17 minutes. It is going to be an absolutely wild day. Hope you guys are ready. And luckily we're streaming it live for you guys so we can all watch it together. What are you guys seeing out there? Let me know in the chat what you guys are seeing as we come into Powell's speech that starts here in 17 minutes. Should be a very, very fun time. SPY up or down? I don't know. So far, it doesn't know itself. We'll have to wait until Powell comes out and probably says something like good afternoon. We do have a Kalshi indicator on TrendSpider that you guys can use. And I believe I have it loaded in here. Let me adjust this color so you guys can see it a little bit easier to a light blue here. But this is basically the top stuff that is probably going to be mentioned on or by Powell. Data, balance sheet, growth, balance of risk. I mean, there's like almost 100% chance that he says all of these things. So we'll keep that up as the press conference goes live. I can hide it for now. But I also wanted to show you guys a really cool prompt that we made for Sidekick. And what Sidekick can actually do now for you guys is that it can scan stocks, or it can use the market scanner to scan stocks for you and act as your AI agent in the process. So basically, I'm telling it to scan for stocks that gapped up 1% today or more, and then rank them by bullish options activity. And it's literally, as you can see, building and running a scan for me with just this prompt. If you guys want to use this prompt, you can, using the link that I'm about to put in the chat. If you're on TrendSpider and you click that link and you're a TrendSpider user, if you're not already, you can sign up for $9 on our website. Just click that link and it will load in this prompt for you automatically and show you some of the runners today, and then rank them by unusual options activity. Let me minimize that a little bit because SPY and is almost hit a low day right there. You can see all these massive wicks here on the 1 minute chart. Definitely some stops being triggered below the previous lows of days here. FOMC is notorious for stopping people out just because of all the volatility. Is a very hard time to trade. So if you are trading, good luck. Definitely money to be made, but definitely money to be lost as well. See what we got in the news desk over here. See, Trump administration quietly pays overdue WTO fees. Interesting. Let's see, Benzinga news desk. Fed says inflation has moved up since earlier in the year and remains somewhat elevated. We saw that from Sidekick earlier. Uncertainty about economic outlook and employment volatility essentially in recent months, which we have all seen. Amazon is laying off people as of yesterday, I believe. Tons of people. We had a bunch of UPS layoffs. So job market is a very, very important thing. Obviously, Fed cut rates. Let's see. So yeah, that is most of the news. And let's take a look at the top stocks that are gapping up today and their bullish option sentiment score. If you pull up the daily chart, it's seeing MU. Look at MU. I think that's an all-time high. This one has been amazing to trade lately. I actually have a video on this. If you look at our most recent VCP video, we mentioned this one. If you open or put on our Minervini trend template candles indicator, you can see once it turned cyan, which means it is in a strong confirmed uptrend based on Minervini's trend template. Ever since then, it has absolutely just been skyrocketing. So that has been an excellent one. We got ASTS right here. If you don't know what this one is, this one has been rallying as well. Broke out on pretty good volume, has pulled back, and looks like it's back up on the prowl there. And SNDK hitting a new all-time high, it looks like there. And again, Sidekick found all of these stocks that were gapping up, and these are the top 3 based on unusual options activity. So very, very cool, prompt that you can use for Sidekick that leverages the scanning ability of it now. And it actually gives us a little bit of, some recent activity. Looks like on MU, there is 188 unusual call transactions over the last week. Makes sense because it is absolutely flying today. Gapping up, of course. That's what I told the scan to find us. So tons of bullish options flow, gapped up. ASTS, also 193 unusual call transactions. And again, I didn't have to manually analyze any of this stuff. Sidekick did it all for me. And this is all confirmed unusual options activity flow that we pay for here on TrendSpider that Sidekick has access to. It is not making any of this stuff up. And then SanDisk, tons. You can see this one is absolutely flying over the last, 2 months or so. Again, with tons and tons of near-term call accumulation throughout the last couple of days, throughout the last week. So again, click the link in the chat if you want to try out this prompt right here. It is something that we built for you guys. And also you can check out our blog post to see more about Sidekick scanning abilities, trendspider.com/blog, or you can just type in TrendSpider Sidekick AI scanning and it should pop up on Google. But let's go over back to the SPY here. We got 10 minutes until the FOMC starts. If you've been buying these lows or trying to buy these lows, at least if you can on those wicks, it's been a pretty good trade so far. Don't really recommend day trading during FOMC, but it is definitely, I'm sure, a good time. Brandon is saying fade the first move when Powell speaks. Could be a move. Stop loss. Nice name. What company will be the first to NGAF about profit over people, jobs? Definitely not Amazon. Me first. Oh, yeah, definitely. Yeah, Amazon obviously doesn't care. They're laying off people right now. They're planning to replace tons of jobs with robots, which is going to save them billions of dollars per year, which should be pretty interesting for the stock. We can pull up Amazon stock right now. Hide this trend template indicator. But as you can see, Amazon is not doing nearly as good as like Nvidia. Let's pull up Nvidia, the king of the stock market. I mean, it's just constantly breaking out. This is the weekly chart, and that is a massive weekly candle. Pull up the daily. It gapped up again today, hit another new all-time high, broke that 5 trillion mark very easily. That it also popped up on the scanner that Sidekick built for us. Let's see what else pops up on here. Anything interesting? Definitely ASTS, Nvidia. LRCX, this is a Lam Research. Pretty nice move there. You can see pretty much almost like a cup and handle. Has a really nice base right here. It broke out. Hasn't looked back since on LRCX. GDS. This is an interesting one. Yeah, it's doing well. Looks like this one actually has some decent upside. It's been making some higher lows here on the weekly chart. Not bad. And it is pretty much gapping up today. Found by our Sidekick scan. What else do we got? Video, of course. We've seen that. Yeah, so that's pretty good. Let's check in the NYSE as well. That's scanned in the NASDAQ NMS composite. Now we can scan in the NYSE and see if we got anything else interesting. NEM is a good one. This one has been flying for quite a while. Kind of probably a smaller name. Let's see what else we got here. Pump. Pump is pumping today. That is a nice move. This is a great scan to find runners on the day that are gapping up. Fubo is interesting. He's gave back all of its gains, though. Cat, I believe, reported earnings this morning. They are up massively. Yeah, look at that one. Cat is just flying today. Classic stock there. Cat, been around forever, and it is up 12% on the day. KGC, this is like a gold company. So, of course, gold is kind of making a return today. Looking pretty good there. TEL. TL has been basing for quite a while now after this power earnings gap. This is a classic power earnings gap stock. You can see right here, it had that power earnings gap. Never touched the gap to fill it. And really, if you bought on this power earnings gap, you really never got tested at all. And it looks like it just reported earnings again. Was that today? Yeah, reported earnings again pre-market. And it looks like it pretty much is having almost another power gap up. So very nice look there on TEL. Very awesome scan that we have here. Did drop the link. Oh, T did gap up, but it gave back all of its gains. AT&T here. Yeah, pretty interesting stock to have on a gap up scanner for sure. But we got 8 minutes until the FOMC. We got Powell coming out in 8 minutes. We will go ahead and stream that for you guys. Let me actually pull that up. Speaking of, and get it ready for us. So once this does come live, we'll have it ready. You can see it on my screen there. That is where Mr. Powell will be speaking here very shortly. Put that right above me there. Perfect. Let's see. What else are you guys watching? Take a look at UEC. What is UEC doing? Close out that scan for now. Minimize Sidekick. Yeah, uranium. Yeah, uranium has been a great one. Looks like this one is up about 6% on the day. Very nice setup. Looks like it broke out, pulled back here, and is looking to push what looks like probably an all-time high. Very nice look on UEC. I see someone, SJD News, is saying NGD is up, new gold. Yeah, it looks like commodities are back up. Looking very nice there. One that I was looking at prior is CDE. CDE is not doing very good. It had a pretty big gap down. This is a mining company. Let's take a look at GLD. GLD is pretty much, yeah, I mean, it gapped up, but it's coming back down intraday. Let's take a look at the SPY daily chart. SPY is also coming down. LLY. Let's take a look at LLY. Eli and Lilly, or Eli Lilly. See, it's in the middle of this descending channel here. Interesting. We do have, earnings looks like tomorrow pre-market, so that should be a cool one to watch. UNH recently reported earnings, and it looks like it's coming back down to test this all-time high anchored VWAP. If you're on the live yesterday, I was talking about this one a little bit since they reported earnings. Let's take a look at SoFi as well, who also reported earnings yesterday. They hit an all-time high, and it looks like they are coming back down from that pump. If you see the seasonality here on SoFi, it looks like October is historically a very good month at 80%. Looks like only a few months over the last 5 years for SoFi are good. And that is really just May, July, and October, which is pretty interesting. And also January at 60%. Interesting stat there. PayPal. Yeah, everyone's been looking at PayPal recently. And is, again, tried to break out above this downtrend line right here, this symmetrical triangle, but it's just absolutely failing. They had news with OpenAI. They're going to be the first, probably of many, or first, or maybe only, I don't know, payment processor integrated directly in ChatGPT. So they pumped on that news, and they also reported pretty solid earnings. But as you can see, they've came right back down, back to the trenches. If you're in PayPal, not very fun, unfortunately. But yeah, we'll see what happens when it comes to the end of that triangle. Did just look at UNH. Let's take a look back at the SPY. You can pull up the 15-minute, and let's look at the intraday volume by price, per session volume by price, it's called. We got yesterday's VPOC here about 687. And it looks like this SPY is probably going to want to try and test that at some point. It keeps breaking down here, getting bought up. But the more times that gets tested, the weaker it's likely probably going to get. So with Powell coming up in 3 minutes, we'll see what happens. We'll see what happens. Again, we got 3 minutes until Powell comes up to speak. Let's pull up our stock market map again and see if anything has changed in sector rotations. SMH looks like it went pretty much back up. I think it came down a bit, but yeah, it's really just consolidating still. Silver still leading. XLE has actually been doing pretty good over the last day. You can see a nice green candle there. And real estate is tanking today. If you look at the XLRE, which is the real estate sector ETF, it is not looking good for real estate, even with rates cutting. So that was pretty much a sell the news event. Theoretically, rates cutting is good for real estate. But again, the market is defying what that means. XLP, wow. XLP, consumer staples, what should be a risk off sector, is doing the worst today. Crazy stuff. Gapping down on XLP. Meanwhile, we got semiconductors, risk on assets gapping up. What a market we're in. And we also have silver gapping up on the day. So again, very mixed and crazy market here. That is the question. It's Leo. I'll put his question on the board here. Do you think the markets are heading to overbull phase, like an AI bubble, like the dot-com bubble we had in early 2000? Again, it's very hard to say. Very hard to say. I think everybody is thinking that, but my answer to that would be that the markets can remain, what is the saying? The markets can remain irrational longer than you can remain solvent. So I'm more of a trend follower myself. I like to ride the trends up until the trends stop going up. As basic as that sounds, I just basically try to avoid timing the top, at least in, trend following, my trend following portfolio. Obviously, if you're a long-term investor, the move is always to basically just stay invested and, buy the dips as they come. So I'm not going to try to predict a market crash. However, the market does move in cycles, and eventually you will get pullbacks. They're going to happen. It's just a matter of when. So formulating a strategy around that and being aware of that is key. Let's pull back open the SPY here. Yeah, very true. Axe cap, or yeah, layoffs and bad jobs report, less people home buying. Absolutely true. 100%. And it looks like Powell is about to come up any second now. You can see on my screen there.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed,
let me know if you guys can hear him.
Shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, Today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks.
SPY is
In
dying.
the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Okay, a big thing he said there, guys. He said December cut is not for sure, far from it.
Pricing has
Massive
assumed
change.
A rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month, and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the the discussion in December, and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, you know, that we haven't made a decision about December. You know, I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
You know, that could be one of the factors, but the reality is we've seen, you know, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, you know, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, you know, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars because, you know, again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, you know, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, you know, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you. Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, you know, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, you know, that would certainly play into our decisions going forward. So, we do have, you know, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get, you know, job openings, and we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market, and you know the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So, you know, We get, like I mentioned, what we get in the labor area. We get some data in inflation, some data in economic activity, and we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then, that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news, that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services. And we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Service inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up, could you mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense, I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard?
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about a continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it, and that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully, and yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data, as the reason December is not a foregone conclusion. What other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4, where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's, you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether, in fact, the growth, that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
So on that division, then, you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut 2 more times. And, we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing. And then there's declining immigration, which is just a big policy change that actually began in the last administration and has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and so the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to 0. So maximum employment doesn't, on a sustainable basis, if you're creating 0 jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last 2 meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. So it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael McKee from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about. It's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that and has been growing and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers, or maybe skewed that way. But the consumer is spending, and that's a big, big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, you may be growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that, where people need jobs, because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information and you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago, you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is that, you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, yeah, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable. Those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney.
Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is pretty challenging situation where we have first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, you know, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, you know, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and, you know, as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, you know, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, you know, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this, and I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. You know, I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, you know, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, you know, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, you know, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. You know, we're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But, you know, we're going to be monitoring this quite carefully and making sure that that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong? In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, you know, the stock market, it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp drop in the in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. But you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll, you know, dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
Okay, looks like Powell is done, but do not go anywhere yet, because in 30 minutes, we're going to have massive earnings reports coming out from Meta, Microsoft, and Google, the very companies that Powell was saying are basically the only ones standing to benefit in this economy. pretty crazy stuff. I don't know if you guys have been reading what my sidekick has been saying right here. Let me cut this music off. It's actually been insanely helpful. So let me kind of break down everything that just happened for you guys real quick. So I've been using Sidekick and just putting in notes based on everything that Powell is saying. And here is some of the key points that I am seeing. So for one, he was saying that right now, core PCE might be like 2.3 to 2.4%, but the inflation pain from tariffs isn't likely to hit until the beginning, like the first 2 quarters of 2026. So the reason why they're potentially not going to cut in December again is because they're waiting to see what tariffs do in the first 2 quarters of 2026. So basically they're saying inflation is okay for now, but it might reaccelerate in the next few months, depending on what happens with tariffs, since it's kind of a lag effect. And Sidekick is over here saying market is underpricing this risk because if inflation reaccelerates in Q1, forget about rate cuts at all. So definitely the chances of a rate cut in December just went down significantly, but it'll be very interesting to see what happens. Another big kind of thing here, let me scroll down. As you can see, Sidekick gives insanely good breakdowns of all this, like incredibly long and detailed, and it's actually giving you specific stocks to position and to look out for. For one, it's saying the broad market like SPY is just too much dead weight because he's clearly saying AI is basically the only companies to stand. He's saying selective opportunities to be careful in is just core AI, obviously NVIDIA, AMD, Broadcom, AVGO, hyperscalers with AI moats, which is Microsoft, Google, and Amazon. Keep in mind, Microsoft and Google report earnings in basically 30 minutes. So I think you can imagine how bad it could be if Microsoft and Google end up reporting not good earnings, if that makes sense. But at the same time, there's a good chance they probably do report good earnings, which really the market needs, because if these Microsoft and Google earnings aren't good right now, it's going to be probably pretty bad, considering the SPY the SPY came down a bit. I mean, there was this massive red candle, but it really, I mean, we're down 0.5%. It could be much worse for this. Here's the bottom line. No rate cuts for a cycle, which is likely no rate cuts in December potentially. So rate cut odds in December are dropping. It still looks like the market's still kind of pricing in that there's going to be a rate cut, but I think there's a good chance there isn't, but we'll see, obviously. And another thing is they're completely missing jobs data right now because the government is shut down. He literally said he's using the Indeed jobs reports, which is obviously not ideal in any way. And he's also said that job losses, which are happening, are being caused from AI right now. So it's nothing that, like, a rate cut is not going to fix that. So again, he basically said we can't do anything to fix the job losses, the layoffs, because it doesn't have anything to do with us, really. It's just those companies. AI is just, it's such like a new thing, and he's really not sure how it's going to react on the market, like in the markets. So yeah, guys, these earnings that are going to come up here in like 30 minutes are going to be insanely crucial. And over the next day or so as well, we got more massive earnings coming out from Apple tomorrow. And again, these companies are literally holding the market up right now. And Powell literally just told us they're holding the market up. He's basically saying these AI companies, like the only companies, like mostly the companies that are actually standing to benefit right now. So yeah, if you guys are out there in the chat, let me know your thoughts. That was a very cool breakdown that I was getting here from Sidekick. Again, if you guys aren't subscribed, hit the subscribe button because we're going to be doing plenty of lives. We're going to be live again tomorrow, continuing to stay live here until earnings come out, which is already just in 30 minutes till the market closes. Yeah, please let me know your guys' thoughts on what's going on in the chat below if you guys have any. You know, the market sold off a little bit here on SPY. Semiconductors, basically, again, not really selling off much, if at all. Like, they also had the initial sell-off, but they regained all of that. Google comes out. They all come out. Let me check the exact time. I think it comes out 5 minutes after the market closes here. Google specifically comes out at 4:03 p.m. Eastern. We got Meta 4:05 and Microsoft 4:05. So they're all going to come out within 5 minutes of the market closing. And let me see if I missed anything else here, but that was really, he also said that it doesn't compare to the .com bubble because it's different. Back then, the companies didn't really have revenue or profits. Right now, these AI companies are making money, at least like Microsoft and Google, all the big ones. Also, we know like OpenAI, which isn't publicly traded, so it doesn't matter as much, but they are not profitable per se. Let's see. Just trying to make sure I didn't miss anything, but that was really what I just explained. Everything that you need to know about what just happened and what Powell was saying. He was kind of going back and forth on himself. That's kind of his job, is to not really, you know, make the market shake up too bad. Let's see what silver's doing. Silver's down a little bit. Bitcoin actually not down too much here. Not down too bad. Real estate is down really bad. I think real estate is clearly the worst, is being hit the worst here out of all the sectors. XRT is also down, which is interesting. XLP is down significantly as well because they're not AI essentially. So even the defensive sectors are not doing great today. Got healthcare down a little bit. Basically, if you're not in AI, you're kind of screwed. If you look at SMH here on the daily, it's doing great. I mean, it literally gapped up today. Let's take a look at NVIDIA. NVIDIA is still holding in there pretty well. Palantir is nearly at all-time highs. Let's check the growth stock like SoFi and financials. SoFi is down a little bit. Let's check out XLF ETF. So financials are down pretty good as well today. But yeah, definitely real estate is getting hit pretty good. Let's check out bonds. Bonds are down pretty good, which means because you know, bonds were probably pricing in a rate cut there in December, and that almost vanished. And so bonds are selling off on that news. Tech is decently up still, but specifically semiconductors are up. Is really the main point that Powell was making, is that AI to the moon, essentially, or not even AI to the moon. It's just that AI is the only place in the market that stands a chance right now. Yeah, so incredibly big day. Glad you guys are here with us. Make sure to hit the like button if you guys are out there chilling still. And also subscribe so you can keep seeing the rest of our lives throughout the rest of the month and tomorrow. So yeah, let's take a look at some scanners that we can find out what is kind of going on in the markets right now. One thing I'm going to run right now is our CanSlim scan. You don't know what CanSlim is, it's basically a combination of fundamental and technical criteria that basically finds market leaders. And so what's showing up here is Hood, which is interesting. Palantir, which recently partnered with NVIDIA, is on there, of course. LRCX, which is a semiconductor company, is obviously doing well. They had a pretty nice breakout today on the daily. GE is doing well. It's on the scanner. Interactive Brokers is kind of interesting. It's doing okay today, but it's hanging in there pretty nicely. It's Interactive Brokers. That is a brokerage for trading stocks. Kind of a good sign that that one is up. ANET, pretty much at all-time highs. See, there's stocks that are doing really well in this market. We can also change this to the NMS composite to get a little bit bigger list here. Let me check the current candle box as well and see what else we got on this list. Let's sort by change price. See if we can find anything green. I think is well. AXGN is up 22% on earnings, it looks like. I'm not sure. Axogen, don't really follow this name a lot, but they're doing incredibly well today. STRL, Sterling Infrastructure, interesting. Really nice base setup there and breaking out. IDCC doing decent. VICR, this one had a very nice power earnings gap. What else do we got here? CELH, this one's interesting. This has been a really, really nice breakout trade. You see it's been consistently making higher lows. This is Celsius. I'm sure you guys have heard of those drinks. They have been doing pretty well. And yeah, they're kind of flat on the day, hanging in there while SPY is down. They're about matching SPY's decline today. And everything down here is the stuff that is not doing well, but is still on the Cancelum scan. So is still overall in the longer term showing strength. This scan basically looks for EPS growth, and let's see, high relative performance, which means it's outperforming most of the market. And it's just basically trading above key moving averages, over the 200-day moving average, and then a rising 200-day moving average. So basically hanging in there pretty well, trending up. But even many of the stocks in here are trading down on the day. So that's what's going on in the market. And again, we have earnings here in about 20 minutes for Microsoft, Google, and Meta mostly. And these are going to be insanely important earnings, you guys. So stick around as we go into these releases, because they all come out within 5 minutes of the market closing. So it should be very, very telling of what the overall market is going to do, because these stocks are basically the building blocks holding everything up. What are you guys in? Are you guys playing these earnings? If you're still in the chat, say what's up. What are you guys thinking about all of this news coming out today? It's been absolutely insane. We got Trump and Xi meeting tomorrow. I mean, absolutely wild times for the market. Let me take a look again at everything that Powell was saying. Ryan, you're asking more bullish long-term on Meta or Google? That's a pretty tough one. If you just look at the overall trend, obviously Google is doing a lot better. Google is actually doing amazing today going into earnings. If you look at the chart on the 5-minute, they are literally hitting all-time highs as we speak. So clearly the market is pricing in Google to be better. But Meta, on the other hand, let's take a look. I'd say honestly, probably overall agree with the market that Google is doing pretty good. A lot of their business does rely on search, though, which is kind of sticky right now with ChatGPT and all that. And but they were able to keep Chrome. They don't have to sell Chrome off, which is a big part of that. So I think Google will ultimately be fine in that case, but that is the one roadblock for them. So hard to say on that. I like Microsoft a lot out of the three. One, because they had that OpenAI news recently. Everyone already knew about the OpenAI news, which is kind of funny that it, jumped on that news, because it's really just old news being brought back up. But it's very reassuring that they own 20% of the revenue from OpenAI and not, the profits, because we all know OpenAI doesn't make a profit, and Microsoft is basically over here just taking the revenue, even though OpenAI is not making money. So that was a pretty good move for sure. So out of the three, I like Microsoft personally. Let's take a look at Intel. Yeah, Intel's been doing real good. So they had sort of a bull flag setup right here after that big gap up. Let's take a look at the longer term chart here. Yeah, Intel's been doing real well. I mean, all the government spending and all that. And again, real estate just down as clearly the most hurt sector today. And even bonds is down as well. So there's really the only place to be right now at least according to Powell, is in semiconductors. And obviously, as you can see in the market agrees. Yes, OpenAI did move to a for-profit, which means they have a goal of making a profit, but they aren't actually making profits. It's very weird the way they set that up. A little bit sketchy because there is like a nonprofit organization that has a stake in the for-profit arm, and Microsoft owns, like, I think it was 27% of the for-profit arm, which is very, very interesting. Maybe they'll end up going public one day. But basically, Microsoft's investment, I think, went from like 10 billion to like, I think it's now worth like 30 billion or something in that OpenAI deal, which is why that news was so big for them. And they are making, you know, they've gapped up multiple times, but interesting enough, going into earnings, they are coming down while Google is moving up. But overall, on the day, they are doing pretty well, I would say, in the grand scheme of things. At least since Powell started speaking there, they've held in there pretty well. If we pull up SPY, let's see how SPY is looking. You can see the overall market, like SPY, is kind of definitely down since Powell started speaking, but something like semiconductors is nearly break even, but it's starting to turn down a little bit. So let's see. Amazon, I think, is going to do pretty well. I mean, yeah, Amazon is out here using AI to, again, replace jobs. That is like one of the main they just did layoffs along with UPS, and that is something that Powell was saying that, you know, their tools can't fix, but is really good for the company itself, which is Amazon, to be doing that because they're saving tons of money, but, you know, obviously not really good for workers. Yeah, fella, I said he saw they saw an article where someone made an interesting observation that it's very difficult to make a profit on AI because of how quickly the chips are becoming redundant compared to the new gen chips. Any thoughts? I'm no chip expert, but let's see. I suppose that's more competitive AI rather than replacing jobs, which would stick reasonably well. The thing with AI is that you see OpenAI, like I was saying, they don't make a profit because, you know, it's very expensive for them to run these models. And so Microsoft has a great end of the deal, and so does NVIDIA, because NVIDIA doesn't, you know, NVIDIA sells the chips. They're selling the shovels to the AI companies, you know. So they don't really care if OpenAI is profitable. They're buying their chips. So that's why NVIDIA is up so much. And then you got Microsoft over here taking revenue, because the OpenAI does make revenue, not profits. They make revenue, and Microsoft is stealing 20% of it. So all these big, massive companies are really just, you know, killing it, while the actual AI company like OpenAI is like bleeding money. It's very, very interesting. So, you know, that is my thoughts. Wow, AVGO breaking out to new highs today. That is looking absolutely beautiful. So basically, I mean, Powell literally just said, like, AI is the companies to benefit from this. Like, take our Sidekick, for example. Like these messages I'm sending, they're not cheap to run. You know, they cost money every time I press enter to run this. And so it is tough, you know, to turn these AI tools into like really good profits. So you just got to price it correctly and stuff like that, which is why it is limited. You get 25 free messages of Sidekick. But if we gave everybody unlimited, you know, it'd be potentially detrimental. Let's see. Meta just hit your price target. Very cool. Yeah, Meta actually looks like it's had a pretty nice reversal intraday. Look at that. Meta Meta is doing great going into earnings here. See how silver's doing. Silver's not really hanging in there super well. Check out small caps. Small caps, yeah, the small caps are not doing great. They were really, really hoping for rate cuts in December as well as today. They got the rate cut today, but to sell the news because the market is forward looking, they were really, really hoping for that December rate cut, and they're not getting it on small caps. Yeah, Sidekick is truly, truly amazing. As you can see, the level of detail has given me on this, on Powell's speech has been, honestly, blows my mind still. It's like, this is literally ChatGPT on steroids. Like, you can't even compare the two. Like, the output is just so much better. And you can use any models that you want. Well, you can use Claude 4.5, which is what I recommend. It's a very good model. You can use GPT-5, can use Gemini, but I mean, Claude, so good. And these answers it gives are just truly, can't get them on any other AIs. MP. Ooh, look at MP. I remember this one is doing really, really well. Actually, I did an article on the TrendSpider blog about this. The Pentagon became the largest shareholder in this company back in July, and they've held in there ever since this power gap since. But it looks like a lot of the games have deteriorated since. Not going to lie to you and sit here, I know a ton about, rare earths because I don't, but I do know how to read a chart. And it seems like this one kind of had its run, had a failed breakout there. And yeah, it's kind of reminded me, if you go back to like the quantum stocks, let's see how quantum's doing. Quantum really had their run, and now the trend is kind of dying. If you use something like the either the Minervini trend template candles, you can see this was like when the trend was there, and it kind of has weakened since. But if you also use the trend template candles, which is really good, you can see how strong the trend is still. Or trend strength, sorry, trend strength candles. It's a very useful indicator in the TrendSpider store. But as you can see, this one, very strong trend, obviously going here into the breakout. You could have played this all the way up until green, but ever since here, the strength on these quantum stocks has really not been good. And, if you're a trend follower, it's probably not the time to get into this, or let's check how it looks on MP. Yeah, MP, the trend was strong over here, and ever since it started consolidating here, it's really hasn't turned back to these bullish cyan or green colors since. So that is my thoughts on that. We can check out SMH with the trend strength candles. Let's check out, yeah, so SMH, they're not printing super, super bullish candles at the moment. Check out like SPY. SPY is not either, but I'm sure something like NVIDIA is. Huh, interesting. Even NVIDIA on this indicator, the trend strength, is not showing cyan or green, which is what you want to see for strong trends. But on the other hand, AMD is showing those nice candles. Broadcom is starting to after this breakout, which is interesting. MU probably is as well. Yeah, MU has been showing them pretty strong. So according to this indicator, it looks like the NVIDIA strength is weakening. I don't know how much you could agree with that based on the fact that it's at all-time highs, but interesting stuff there. We got 10 minutes until the market closes as well, you guys. If there's anything else that you guys are watching, let me know in the chat. If you're still around, make sure to hit that subscribe button and hit the notification bell so you can join us tomorrow and for all the other lives as well that we're going to be doing. We're going to be doing tons over the next month or so and into the foreseeable future. But yeah, what else can we do here? Put off that for now. Take a look at Microsoft. I think Microsoft is going to be really fun to watch in this earnings report. is starting to turn back up there. Microsoft, Google. Google is looking amazing. I mean, it's looking really good going into earnings, you guys. Meta, they're all flying. We got 10 minutes till the market closes, and the 3 stocks that the market is pretty much relying on right now are looking very, very well. Coinbase. I don't know. I'm not, wouldn't say I wouldn't say I'd probably be trading Coinbase in this market, to be honest. Crypto has kind of been, let's check out Bitcoin. Yeah, crypto's really just been kind of consolidating lately. Hard to say what will happen with crypto. But everyone is really just focused on AI right now. I like to follow the trends and get out when they stop trending. And at the moment, crypto is not really trending. So I don't think I'm really necessarily bullish or bearish here on crypto. Let's check out some of the other altcoins. Like, let's check out Solana. Yeah, you're kind of just chilling there. I mean, they've just been in this range since, I don't know, over a year at this point. Now, the Trump coin recently kind of popped, I think. Believe it or not. Still can't believe that the president of the United States ran a pump and dump. Kind of wild, isn't it? But look, it's starting to come back up. Over the last few days, it's up like 40% or so. Up back to 825. But yeah, that's that. Are there any stocks that we have missed? Oh, Nokia. Yes. Nokia. Nokia is interesting. NVIDIA just invested like $1 billion in Nokia. Sent it up flying like 40% or so in the last couple of days. Kind of like a meme stock, I guess. I think this was one of the meme stocks back in the day. Kind of, sort of. Yeah, that one's been interesting. You see the volume is absolutely flying. So, I mean, the fact that NVIDIA partnered with Nokia is obviously probably the best news they probably could have gotten. Broadcom, I mean, I personally am holding Broadcom. Been holding it for about a week or two. So, yeah, I mean, I think it looks really, really good personally. Already has made a pretty significant breakout. So I don't know, maybe it'll pull back again for you to get back in, but I think it's looking pretty good. Let's see, AST. Let's go look over here. ASTS. This has been a pretty crazy stock. I think we looked at this one earlier. Yes, IDCC is killing it. Pretty sure I was in this one at some point around there. But yeah, ADCC looks very, very nice. Check out silver again. Yeah, very, very strange market, you guys. And even Powell over there at the Federal Reserve. Look at TLT on the weekly chart. Looked like it was trying to break over this downtrending line, the symmetrical triangle, but so far now it looks like after that rate, December, probably a halt of cutting rates in December decision that was just kind of made, hindered it pretty good. Not looking good. But 6 minutes until earnings are out, you guys. Is anyone placing bets on earnings today? You can go ahead and change the title of this in the meantime here. Since FOMC is over, Let's see. Oh, fella says, I feel like the small caps that are surviving the lack of a rate cut show good management and fundamentals. Could this be an opportunity in disguise? Yeah, it sure could be. That's a good point. Let me open up Sidekick here. I'm going to say scan for stocks in the Russell 2000 index are showing strength technically and fundamentally. Since the small cap stocks are down on news of less future potential rate cuts. Let's just go ahead and press enter on that and see what happens. So what I'm doing here, you guys, is I'm using Sidekick AI to help me find stocks, small cap stocks in the Russell 2000 that are showing strength technically and fundamentally that we can take a look at to see if there are any diamonds in the rough. Wow. 377% mover here on CMBM. Interesting. AXGN, AXGN flying up. See what Sidekick has to say. GH, yeah, these are all pretty. Oh, LMND is in here. I've heard of that one. I didn't know LMND was even a small cap stock. Let me go ahead and put on market cap indicator and see what the market cap of LMND is. Sometimes they keep stocks in here that aren't necessarily small caps. That's 3 billion market cap. I thought Lemonade was bigger than that, but looking for a diamond in the rough, Lemonade is looking pretty damn good. That was on one of my breakout scanners the other day. It's up 6% on the day. POWL. I'm in this one. This one's a great one. Up 6%. This is Powell Industries. It's up on Powell speaking for the day. Gotta love that. Just kidding. Yeah, they got IDCC in here. But you guys see how easy this is with Sidekick to just find exactly what you're looking for just by typing it in to the chat. All right, it's 12:59. Stop this nonsense. We got Microsoft. We got, hold on, let me get multi-symbol view going here. Let's do this. Let's get Microsoft in the top left. Let's get Meta in the top right. Let's get, there's a Google in the bottom left. I think, who else was reporting today? Let me first get these on the 1 minute. And let me double check what else was reporting here. Let's see if we get any movement. I gotta turn on the aftermarket data here, so we can see these after hours moves all in real time. Give me 1 second here, guys. Someone's at my door. All right, sorry about that, you guys, but let's take a look at what is going on here. We got Google flying off the chart. We got Microsoft moving up. Still got, what, a couple minutes until these actually report. And I was going to figure out which one to replace SoFi with. We got Starbucks reporting. That one's all right. Oh, we got what is it? Burritos reporting Chipotle. Let's stick that on the chart. Why not? So calm before the storm here, everybody. Let's see what happens. Yeah. Oh. All right. Here comes the storm. We got Google moving up. Google is flying higher here. Google is flying. Wow. Get ready. Hopefully we get some nice green candles across the board. If you guys are just joining in, it looks like a bunch of you guys just joined in. We've been live all day, like almost all day for the FOMC, and now we are watching earnings from Microsoft, Google, and Meta, and also Chipotle. If you're new, please hit the subscribe button and like, because we're going to be going live tomorrow as well for Apple earnings and all the other massive companies reporting earnings. It looks like Microsoft is dumping. Google's looking pretty good. Microsoft falling off my chart to the downside. This is not looking good for Microsoft, but Google is flying. What are you guys seeing? No bets on earnings? Yep. Yeah, they waited for market close because earnings are being reported. And if you guys don't know what TrendSpider is, you just happen to pop in here. We are running a Halloween sale. You can get a trial of the platform for just $9 right now. If you just go to TrendSpider.com to get access to all these tools for just $9 for 2 weeks. It's one of our best sales of the year is a Halloween sale going on right now. You can save up to 55% on the platform. You guys are just tuning in. We've been live all day analyzing the FOMC events. You can go ahead and watch it again if you wish. After the stream ends, maybe right now you can just rewind it. But you probably want to be tuning in for earnings right now, because right now Microsoft is dumping and Google is flying. Let's take a look at how much action we're talking here. Google is up over 6% right now, and Microsoft is down over 6%. We got two of these stocks. They're canceling each other out right now. Chipotle is not doing a whole lot. Meta is also not doing a whole lot. They should be reporting any minute now, I think in like 1 minute probably. Again, if you guys are just tuning in now, please hit the subscribe button, because we're going to be going live again tomorrow. You guys do not want to miss these events, because it is quite literally one of the biggest weeks all year for the market. We just had FOMC, and we're watching some of literally the biggest companies in the world report earnings right now. And Meta is dying, is absolutely tanking on my chart. It is falling off. Not too bad, down 3% and counting. So, we got 2 out of 3 down. We got Google up, and we got Chipotle starting to move up. And Chipotle is the least exciting. Let's see what the other mega caps are doing. Amazon is sort of coming down. Let's just throw up SPY. So the overall market SPY right now is down in after hours movement. Look at Meta is completely falling off my chart. Down 5%, over 5%. In just a second here, once we see all this movement, we'll go ahead and analyze the earnings and see what's going on. But really, only thing that matters right now is what the markets are doing, how they're reacting to the numbers. Because price is everything. Crazy wick there on Google. Now you guys can't really see SPY. Let me move it over. Bunch of people are joining in. Make sure to hit that subscribe button. We're going to be going live so much throughout the next earnings season over the next month. Glad to see you guys are all here. Yes, absolutely. Forward guidance is going to be key. Going to be key. I want to show you guys what is going on here with Sidekick, but I also want you guys to see all of the charts. So I will analyze what happened with all of these earnings in just 1 second. But as you can see right now, Meta falling, Microsoft falling, Google moving up. All of their numbers have come out. Let me take a look. Another window over here to see what is going on. Wow. Meta, the one that is absolutely dying and falling off my chart. EPS missed and revenue beat. Wow, they missed EPS by a ton. Based on a one-time $15 billion expense, apparently. So that is why Meta is absolutely dying. Microsoft EPS beat massively. So did revenue. And Google beat on both as well by quite a bit. So Meta, one-time expense on the EPS. So that caused them to miss EPS, but I think revenue is good. Let me double check. Yeah, revenue is good. Microsoft and Google, massive beats. Good for the overall market. However, Microsoft itself did just dump a little bit, quite a bit. If you guys are new to the platform, TrendSpider, that is, we are running a Halloween sale right now. You can use the link that I'm going to drop right now in the chat to save up to 55% and try it out for just $9. I know you guys will love it. Otherwise, hit the subscribe button so you can come chill with us as we continue to do these live streams for you guys. It's absolutely free to join. And we'd love to have you guys back. Who is out there in the chat that is trading any of these stocks right now? Hopefully, maybe we got somebody in Google to the long side. Microsoft is down, but not down that bad, luckily. Only down 3%. And Meta, yeah, Meta itself is down about 8%. Not looking good. Yeah, Felix, good thing you did. Oh, I'm sorry to hear that. I'm sorry, you guys. If anyone is long Meta, that is tough. Sorry to hear that. Is anyone long in Google? Oh, my jaw, you guys. Been live for, I don't even know how long at this point. And we're going to be going live again tomorrow. So again, hit the subscribe button. We'll see you tomorrow. Hit the notification bell. We'll be going live right around market close, about 15 minutes before market close tomorrow. Nice. Glad you're long. Google has been absolutely insane. So glad all of you guys are here watching this together with us. Because, wow. I mean, I don't even know what to make of this market. It looks like the SPY itself is, where did they close? They closed about right there. SPY itself is down a little bit after market, but we got pretty mixed reactions here. We got a big double beat from both Microsoft and Google. Microsoft is down though. Google was up, but they're coming down, and Meta is in the dirt, in the dirt right now. Meta EPS was like, what was it? It was terrible. That's what it was. Let me double check. I'm seeing a Meta EPS of 1.05, and the expectation was 6.66. Yeah, earnings are always a crapshoot. You never know. But yeah, that Meta one is pretty brutal. Yes. Luckily, the overall market isn't being hindered too bad by this stuff. Let's see if something like NVIDIA is moving at all. Not much. Not much. Let's check out Chipotle. Still, people are still joining in, it looks like. If you are, make sure to hit that subscribe button so you can check out our earnings live for tomorrow. We'll be watching Apple. Will be another great time. Luckily, the markets are hanging in there pretty well today with all the craziness going on. Yeah, it's just reverting to the mean. Google, it's coming down from 295 back at 285. It's been moving in increments of 10, from 275 to 295 back to 285. I think Starbucks reported as well. Let's take a look. Starbucks is up. If anyone is watching Starbucks. Who else had earnings that we could pull up? Starbucks. Carvana had earnings. So did Coca-Cola and Melly. Let's look up Carvana. It's been a crazy one. Carvana down pretty good. KO reports. Ooh, Coca-Cola up decent. Nothing insane. Barely $1. Melly barely has a bid and ask spread on Melly. Go back to Chipotle. Google's bouncing off this 821 EMA cloud as we speak. Meta missed EPS by like a ton, so they're dying. What scanner said 93% what? Yeah, Meta is insane. Meta is down a ton. Almost down 10%. Right now it's down about 7. Microsoft at the lowest is down 5.5. Right now down about 4. And Google at the top, it was up 7.5. Now it's up about 5%. Pretty crazy stuff, you guys. Pretty crazy. But I'm just happy the markets are still hanging in there, personally. Could have been a hell of a lot worse, depending on what obviously happened today. I'm up a bunch on GH right now. I think they reported probably. Oh, yeah. GH. Loving this one. Ooh, gotta love it. GH is up 16%. Let's go. When did I even get in that? I don't know, but I'll take it. Yep, Trump is going to be talking with the China president tomorrow. First time watcher, do you expect more volatility following earnings release, or are big shocks over? I think the big shocks are definitely over, but tomorrow, well, no, during the earnings call, definitely some more shocks could come in. Earnings calls are probably going to be in about an hour or so. Alvarado, what do you mean get worse? They're doing amazing. Markets are at all-time highs. I am loving it. If you look at the SPY, it's down a little bit. Some weak sauce sell-off today. We can count as a sell-off. I mean, it even dropped 1% total on the day. Down 0.29% from today's open. I will take that any day, especially with all the news coming out right now. And if you guys are just joining your first time watchers, make sure to hit the subscribe button because we are always going live. We're going to be going live a ton over the next month. So you guys can check out what is going on, stay on top of the markets, all for free. Really appreciate it. And also, if you haven't used TrendSpider yet, you can get a trial of the platform for just $9 at TrendSpider.com. Bruno Smith, what news? FOMC was today. The rates were cut by 25 basis points. We were covering that. Mr. Jerome Powell, Fed chair, was speaking earlier. And 3 of the largest companies in the world are currently reporting earnings. That is the news for today. Tomorrow we got Apple. What else is tomorrow? Let me double check. I know Apple's tomorrow. I think Amazon. Yeah, Amazon and Apple earnings will be live for again tomorrow, so make sure to tune in for that. Google Target. Yeah, so now that earnings have really come out, let me swap over back to the big screen over here. Let's ask our sidekick. So I just typed in there to Sidekick to give us a quick analysis of the 3 major stocks, Microsoft, Meta, and Google, that just reported earnings, and it's going to do that for us. And it's just going to tell us if the earnings were good or bad because, you know, that's sometimes all you need. AI will take care of the rest. Sucks to see Microsoft down, though. Not bad, 3%. It says Meta. Hold on here. Oh, I'm actually seeing an EPS beat for Meta. That is highly contradictory to what my other source was. Yeah, apparently EPS beat on Meta, and so did revenue. Yeah. All right. Never know with these earnings releases. But forward guidance looks like it's pretty good as well. Pretty much in line, Sidekick is saying. But solid beat on both lines. Microsoft beat was very strong for sure. 12.7% beat on EPS, 3% beat on revenue. Guidance not visible yet in our news. And definitely Google was an awesome beat on both EPS and revenue. Sometimes you never know. Just because they report good earnings does not mean the stock goes up. There's your quick take from Sidekick, though. Sometimes it's just positioning. Meta on the daily chart was looking by far the worst out of all of them. Google looking the best. I mean, that thing is just skyrocketing, as you can see on the daily there. Microsoft is looking pretty good, but tanked, and Meta is definitely looking the weakest technically out of all of them, and now it's down to the July lows, as you can see right there. Yeah. But yeah, you guys, that was earnings. If you guys have any other comments, leave them down below. Love to see your guys' thoughts, see your guys' take. But so far, if you pull up SPY, down a little bit, QQQ down a little bit, IWM not moving. So really, overall market still looking pretty damn good. SPY is nearly at all-time highs. Does have a gap to fill. I think 2 gaps. Yeah. 2 gaps to fill on the daily, if they do fill. That is. Take a look at volume. Pretty heavy volume today, as expected, over the 20-day average volume on SPY, which is, again, expected with FOMC and all these earnings. But I think tomorrow should get pretty wild as well. You guys are just tuning in. You're just looking at all of the earnings coming out right now from Microsoft, Meta, and Google. Turn on the after hours data for you guys. I think the biggest mover has definitely been Meta to the downside, unfortunately. Not looking good. Continuing to make new lows, almost down 10%. But again, you guys have not hit that subscribe button, hit like, so you can tune in again tomorrow for more massive earnings. So you got Meta down 9%. Microsoft is down 3%. And Google is the only one up today on earnings, that is, up about 4%. So pretty nice moves. If you're just looking from a volatility perspective, would have liked to see all 3 of them in the green, of course, but it is what it is. I guess GH ripped as well. Like 13% on GH. Very nice. Very nice. This one is a nice breakout play to the upside. Love to see that. Look at the daily charts for all of these earnings. Microsoft's pretty much rejected their all-time highs and is coming down back into their base. Meta was really kind of not looking super good on the chart going into it, but it looks like it's potentially had some support here from the July lows. And Google ripping to new all-time highs out of this base. Very nice breakout. Looks like it broke out from its base right around here on high volume. and it's continuing higher. That is that. If you look at the analysis here, all three companies beat on EPS and revenue. Let me double check Meta because I did see some contradicting news here, but I'm definitely seeing a beat on EPS. Not sure where that other number came from. And again, if you guys missed it, we had FOMC earlier today, just not that long ago. We haven't even stopped the live stream since. Show you guys what happened on SPY, I suppose. Pretty much Powell started speaking right around here, and the market went down, chopped around, and yeah, really honestly pretty flat since then. Barely down 0.5%, not even down 0.5%. So market is pretty well intact. Still near all-time highs, looking pretty good in the grand scheme of everything. Hopefully Microsoft earnings call or whatever, and the Meta earnings call, they can reassure investors, maybe get the stock to move back up. Be nice for the overall market, overall tone of the markets for sure. So yeah, we'll see. Again, if you guys are new, hit that subscribe button before you go, because we are always doing lives like this, so you guys do not have to sit there at your charts. We'll do it for you. Got all the info you need here on TrendSpider. So Meta is a weird one because from what I'm seeing, it looks like they had technically a really bad EPS based on a one-time like $15 billion payments. But if it wasn't for that payment, their EPS beat by quite a bit. So did their revenue. Yes, definitely Meta will provide some guidance on their earnings call. At least some sort of guidance, yes. Yeah, Meta is by far the biggest mover, and unfortunately is to the downside. CMG, Chipotle reported they're not moving a whole lot. So did Starbucks, also not reporting a whole lot. But you know, I'm pretty happy with these earnings. They all did pretty well, and the SPY is hanging in there. The overall market is good. Can't really ask for much more. Obviously, it sucks that Meta and it's down pretty good. Microsoft down pretty good as well, but you know, in the grand scheme, they have had one hell of a year. So really cannot complain. Meanwhile, Bitcoin is still down on the day. Real estate still bleeding. Silver is doing pretty good still. Gold, silver's outperforming gold today. It's interesting. TLT is down significantly. Yeah, maybe it is a buy the dip opportunity. And tomorrow, guys, we're going to be going live for Apple earnings. Take a look at Apple on the daily. They are just today hitting all-time highs. Very nice. And then Amazon is also reporting with Apple tomorrow, as they kind of hang in there. Not looking incredible on the chart, but they've had pretty good news lately. Unless you work for Amazon, that is. Because they're doing mass layoff. Not mass layoff. They cut like 30,000 jobs, and they plan to cut a lot more. So that should be a very, very interesting one for Apple or Amazon tomorrow. Yeah, you guys, if you're in Meta, if you're in Microsoft, definitely could be saved by the earnings calls. You never know. And yeah, I think that's probably going to do it for the stream, you guys. Solid beats all around, but unfortunately, stock price doesn't always go up when the market beats, as you can see. But the SPY's hanging in there. Again, if you guys are new, hit that subscribe button so you can tune in tomorrow. Hit the notification bell so you don't miss out. We'll send you a notification when we are going live tomorrow again, because there's another round of incredibly important earnings tomorrow. If you guys missed it, you can go watch the FOMC live. We've been live for like, oh my God, like 3 hours, over 3 hours, you guys. But yeah, you guys. Also, make sure to take advantage of TrendSpider's Halloween sale. You can try the platform for just $9. Let's go to TrendSpider.com. I'll drop another link in the chat for you guys to go ahead and take a look. If you guys don't know what TrendSpider is, it is an all-in-one trading tool that does market scanning. We have our AI built into it that has access to all of our data that I use to literally easily and quickly analyze all these earnings for you guys very quickly, that you can have access to for just $9 right now. Highly recommend it. I cannot even live without TrendSpider at this point. And we have an amazing support team. If you have any questions, sign up for a trial. You can contact them with any questions that you may have. So yeah, other than that, you guys, I think that's going to do it for this stream. And I'll catch you guys tomorrow. Make sure to hit subscribe and tune in tomorrow at 3:45 Eastern for Apple and Amazon calls. Catch you guys. Peace.